Hi, this is Mark with ValueCharts.com. Let's take a look at the gold market here. Basically, we were able to take out about 12.5 cents or $12.50 an ounce here in this market on the short side. We established a short yesterday right at around the morning time at 1672.50, and we just covered that short about 3 hours ago, call it, at 1660. Now, so we were able to take out some profits. The whole time we knew we were trading counter trend. At least that was our belief. As stated previously, I'm actually very bullish in gold, but that seemed like a compelling shorting opportunity for, given the fact that we were significantly overvalued on a 60-minute price chart according to our value bars indicator, and also given the fact that on a daily basis we were looking like we should be correcting. Pulling up the daily price bars here. Basically, I thought there was a chance we could go back down and test this breakout level. But given the fact that we haven't done this, this shows that this market could be a lot stronger than we originally thought, which is actually a good thing for the bulls. So we are now looking to buy this market. Now, let's talk about strategy here. First of all, I'm going to pop up a weekly chart. We have basically broken the wedge pattern as we see here on a weekly and a daily basis. And we've also recently broken a trend line on the longer term weekly chart as well. And we've basically come back down to that higher trend line here. Let's go back and check the daily bars again. And now we're floating on this trend line. We're finding support right here at this trend line. So even at this level right here, technically, this would be a potentially a great buying opportunity. But what I'd like to do is drill down maybe even to the 30-minute price bars and look for an opportunity where this market will come back down here and possibly correct into the moderately undervalued basis. Or we could even look at a 60-minute price bar for that matter and look for this market to rally over the next couple of hours. And then we should see some sort of correction that should take us down to moderately undervalued price levels. I'm using a 5-bar analysis period here, and I'm using a 0.2 value for the scaling multiplier. So basically, that should give us an opportunity to buy this market at moderately undervalued, assuming that our long-term projection is right. I think we could have a long way to the upside in this market over the upcoming months. If we are fortunate here, the goal is to enter a strategic long entry position, going back to the dailies here. If we can enter a position intraday, catch a moderately undervalued or a significantly undervalued price point, I would recommend looking at moderately undervalued because you may not see a significantly undervalued price point if this market ends up taking off. So if we catch this wave just right, we could put our initial stop conservatively right around the 1663.50 level, I'll call it. But if we trade with intraday bars, we could even have a much tighter stop intraday and not really have to risk a lot. This is one of those trades where we would want to potentially trade this for a longer term move. Gold, I'm very bullish on gold. I think gold is heading higher longer term because of many factors. But if we can catch this trade right, conceivably we could put on a fairly large position, not risk a lot, and if this market rallies at all, we can move up our stop to break-even levels and let this thing sail away. We can use several different types of tools to manage our longer-term position, including just some basic trend-following strategies, longer-term trend-following strategies, but this is a trade that I'm conceivably excited about. Now, as with any market analysis, we're always looking to be listening to what the market has to say to us. So this is what our opinion is today. And if the market continues to validate this by showing us higher lows on a daily basis, then this is just a dynamite potential entry point where we could conceivably risk $10 an ounce at the most, and maybe even less than $10 an ounce, maybe $4 or $5 an ounce in our trade, and we could potentially make several $100s an ounce if this market really ends up taking off. So that's kind of what we're shooting for. I would recommend on this particular case, with the longer term breakout from several the wedge pattern on the daily and weekly, and the down trend line on the weekly longer term chart as well, My recommendation here is to play this longer term. Hold on to this trade, manage it, and continue to watch these videos. We can give up some, or we'll present some ideas here and then in the upcoming videos talking about how to manage a longer term play here. This is a dynamite play potentially, and think about the reward to risk ratio here. We could be looking at a 50 to 1 type scenario, which is obviously highly desirable. So let's look for a strategic entry point in the upcoming hours, moderately undervalued on a 60-minute or a 30-minute chart, and then let's start talking about different stop placement levels as well, and continue to watch this market and see if this market continues to validate our opinions about what's going to happen.